All right, let's jump right in. Today, we're going to tackle a really interesting problem, one that, believe it or not, every single successful business has to face at some point. It's this. What do you do when that amazing growth you've been riding just stalls out? We're going to open up the corporate playbook and figure out how companies find that next big thing. So, I want you to imagine this for a second. Your business is a success story, right? You got happy customers, you're hitting your numbers, but that rocket ship growth you had, yeah, it's kind of leveled off. That beautiful steep line on the growth chart has gone flat. This is that moment, that critical fork in the road where you have to ask, now what? And look, the first thing you've got to understand is that this is not a sign of failure at all. In fact, it's a totally normal part of what they call the business life cycle. Every company starts, it grows like crazy, and then it hits this maturity stage. I love this analogy. It's like you've climbed a huge mountain. The view is awesome, you've accomplished something amazing, but you can't go any higher from there. You've got to find a new mountain to climb. So, yeah, the challenge here isn't just about survival, just keeping the lights on. It's way bigger than that. It's a fundamental strategic decision point. The real test is finding that next engine for growth and having the guts to actually commit to it and launch the company all over again. Okay, so how do you find that new engine? Well, one of the biggest and most powerful answers in the business world is a strategy called diversification. It's pretty simple in concept. Instead of doubling down on the one thing that made you successful, you start spreading your bets. You start playing on a few different tables. So, what are we actually talking about when we say corporate diversification? All it really means is expanding your company by jumping into new markets or creating completely new products. The goal is simple, really. First, you want to spark brand new growth. And second, you want to de-risk. That whole don't put all your eggs in one basket thing? This is the corporate version of that. Now, when it comes to diversification, you can basically break it down into two big categories. On one side, you have what we'll call related plays. Think of these as moves that are pretty close to your core business. They make sense, they leverage what you're already good at, and they're lower risk. Then on the other side, you've got unrelated leaps. These are the big, bold moves into completely new territory. We're talking way higher risk here, but the potential reward, it can be absolutely massive. All right, so let's dig into that first category, the related growth plays. The best way to think about this is you're expanding your own little universe, right? You're building outwards from that strong core business you've already mastered. And within this category, there are really three main moves you can make. First, there's vertical integration. That's all about controlling your supply chain. Second is horizontal integration, which is about expanding sideways into similar businesses. And third, concentric diversification, which is basically branching out into closely related fields. Let's kick things off with vertical integration. This one is all about one thing: control. You're basically deciding to own more of your own process. You can either move forward down the chain, getting closer to the end customer, or you can move backward, up the chain, to control the stuff you need to make your product in the first place. Okay, this makes a whole lot more sense when you look at some real-world examples. Think about Apple. When they decided to create their own Apple stores, that was a classic forward integration. They wanted to own the entire customer experience. And for backward integration, Starbucks is perfect. They started buying their own coffee farms to control the quality and supply of their most important ingredient, the coffee bean. All right, next up, horizontal integration. If vertical is about moving up and down the supply chain, horizontal is about moving sideways. It's about growing your footprint inside your own industry, often by buying up a competitor or maybe a company that's in the same field but sells to a different audience. And a great example of this is the company Evergreen. You probably know them for their huge cargo ships. That's Evergreen Marine. But they also own a major airline, Eva Air. See what they did there? It's all transportation, but one business moves boxes and the other moves people. They're dominating different parts of the same industry to grab more market share. And that brings us to our third related strategy, concentric diversification. This is when you take one step just outside your main business into something that's, well, related. It feels like a natural fit. It's a new area where you can use the skills, the tech, or the brand name you already have. So let's stick with Evergreen, because they're a perfect example here too. They fly people all over the world with Eva Air, right? So where do all those travelers need to go when they land? Exactly, a hotel. So Evergreen opened their own hotels. It was a super smart, concentric move that played right into their existing business. Okay, let's completely switch gears now and talk about the other side of diversification, those unrelated growth leaps. This is a whole different animal. We're not just expanding our little universe anymore. No, this is about jumping into brand new universes. This is how you build a conglomerate, a true empire of businesses that have, on the surface, nothing to do with each other. And when you talk about this strategy, there's one name that stands above all the rest: Samsung. This quote really says it all. From birth to die, all controlled by Samsung. I mean, think about that. In South Korea, the saying goes that you can literally live your entire life just by using Samsung's products and services. And if you want a number to really put that into perspective, get this. All of Samsung's different businesses, when you add them all up, make up about 25% of South Korea's entire GDP, a quarter of the whole country's economy. That's just a staggering amount of power and diversification. So what does this empire actually include? Well, yeah, you know them for electronics, phones, TVs, all that. But did you know they also have a massive construction company that builds some of the world's tallest skyscrapers? They're also in the insurance business. They even run schools and kindergartens. There is absolutely zero connection between making a Galaxy phone and running a kindergarten, but that's the point. They've spread their bets across the entire economy. Okay, so we've covered a ton of ground here, right? We've gone from these small, logical steps all the way to these giant, unrelated empire-building leaps. So now let's take a step back and really talk about the big picture and, why any of this actually matters. So let's just do a quick recap to lock this all in. Vertical strategy, that's all about control and efficiency. Think Apple. Horizontal, that's about owning the market. Think Evergreen with their ships and planes. Concentric, that's about playing to your strengths, like Evergreen getting into hotels. And finally, unrelated, that's the empire-building, risk-spreading play, and that is 100% Samsung. And here's why this is so cool to understand. Once you know this playbook, I promise you, you will start seeing it everywhere. The next time you read a headline about some big tech company buying a movie studio or a car company buying a battery factory, it'll just click. You'll get the why behind the move. It's like having a decoder for the entire business world. Because at the end of the day, that's what all of this is. It's a calculated high-stakes bet on the future. Every single day, huge companies are making this choice. Do we play it safe and stay close to what we know, or do we risk it all for a chance at something massive and new? So I'll leave you with this question. If it was your company, your success on the line, which bet would you make?